We're just with governmental accounting. Again, I'm trying to be brief. Doesn't seem to always be the case. Usually it's not close at all, but we're going to try again to be very brief. My plan today is just to gloss over chapter 15 and then come back tomorrow around lunchtime and do the in the chapter questions. A couple of them, two of them are some journal entries. Well, I think it's maybe just one of them, but we're going to look at journal entries between the different types of colleges, okay? We use the same transactions. We'll apply them to a public college. We'll apply them to a private college to see the differences. So it'll be fun, right? Anyway, first thing I want to point out is here on, if you notice these due dates for everything that we've done this year, I've bumped back every due date until essentially 2 weeks from today, roughly. Okay, 13 days from today. The 27th of April, which is the first day of exam week. That's your last chance to do any Learn Smarts quizzes from previous chapters. Okay, and also we still have. They're not Unit 4 assignments up. That's been pushed back some. That's just fine too. But the only thing not on this on the Connect that we'll be doing a final exam, which I haven't done it yet. I haven't made it yet. And also the Unit 5 assignment will be, it's not on the list yet either. But those will both have the same due date. Well, the exam due date will be like Wednesday. Okay, Wednesday at midnight, which is the 29th. Once I get that up. But anyway, so if you've missed anything, whether it's from transitioning to online or you just missed something earlier in the semester, whether it's a Learn Smart or a quiz and you forgot to do it and you want to do it, now's your time. Get in there, get it done, get those points in. I'll be updating Blackboard for a governmental accounting class very soon. So you'll be able to see exactly where you stand, okay? So chapter 15 is accounting for colleges and universities. Colleges and universities. So this is probably going to strike close to home for some of us because you guys are all college students. I used to be. Now I'm an employee at a college, obviously. So there's three types of colleges, okay? There is public, which is most of your state schools. In South Carolina, you're talking about Clemson. You're talking about USC, all the campuses of USC, whether it's Columbia, Aiken, Upstate, whether it's Salkehatchie, Sumter, okay? I'm pretty sure Coastal Carolina is public. Lander is public. I'm not sure about some of the other ones. I don't want to make a mistake, but I know those are all public. South Carolina State University is public. But most of your big colleges, Alabama, Georgia, Florida, all your big SEC schools are all public for the most part. So the majority of your, the state colleges, Tennessee, University of Tennessee, stuff like Penn State, all those guys are public colleges, okay? And then you got your private colleges. Of course, we all know that North Greenville is a private university. Other small schools, Charleston Southern is private. Down in Orangeburg, Claflin College is private. Most of your small, Notre Dame is private. That's a bigger one though, right? Where's some other big private ones? I think, what's the ones? Brigham Young. It's a big one, right? That's for a religion as well. Anyway, Harvard. Those are Ivy League schools. Those are all private as well. So private institutions have a different bookkeeping system. Well, they're going to do it different than public universities. There's also another one. The for-profits, right? For-profit schools for profits. And there's the two that I know of. One of the biggest ones probably going to be University of Phoenix. Really big online for-profit school. And then down at Florida, I think it's in the Tampa area. There's one called Full Sail University, and that's where I'm a wrestling fan, but the NXT, which is one of the WWE, it's kind of like a minor league, kind of, not really, and they have a home base down there where they tape all their weekly television programs, which is good for Full Sail. Think about it, they have a very good like audio visual student department or whatever, or program, and they integrate the wrestling programs. The students actually get in there and get involved and do the filming and help do the editing and help do some of the sounds and lights. It's really good mutual. I would think it's probably a pretty good beneficial relationship between both of them. The students get to experience real hands-on work, and the TV program gets taped and made, right, for the television. Regardless, so that's your three, right? So you got public colleges, private colleges, and then for-profit colleges. Now, the second two of those, the latter two there, private colleges and for-profits, they're pretty much kind of together. And then the public's kind of off by itself, okay? Public colleges, universities, their oversight, their rules and regulations come from GASB, right? So it's the Governmental Accounting Standards Board, okay? And essentially, they're kind of treated like a special purpose government, okay? So we talked about those earlier. The big example there would be like a school district, okay? And so that's kind of where the public colleges fit in. The reason for it is most of the time the money that comes in is coming from tax revenues, it's non-reciprocal donations. Obviously, tuition and fees do come in, and they should make up a big part of it. But a lot of the other money is coming from tax revenue, whatever else. Whereas the for-profits, they're for-profits and the private colleges, those are more like, what I'm trying to say, like an enterprise fund, if you will, okay? The majority of their revenues are coming from tuition and fees, and so it's almost like a for-profit business, even though it's not for profit, right? So it's the expenses are being covered by user charges and service fees. So they're kind of like a enterprise fund, okay? But regardless, the private colleges and the for-profit colleges, they are their regulations come down from FASB as opposed to GASB, okay? Nonprofits are governed by FASB. Governmental nonprofits are done by GASB, okay? And so there's a separation. So one, you got public is oversight by GASB. You've got private and for-profit oversight is FASB, okay? It even says here, one of the good things about the reporting model for the state and for-profits is they do not have to use fund reporting. Now, some still do because it's what they're used to, and that's a good thing for these state and for-profits. They don't have to use fund accounting. It also says here in the first part of the book here, it says that generally accepted accounting principles are GAAP for private and for-profit colleges are found in the FASB codification, which is the laws or the accounting rules, I guess. There is some information provided by AICPA in this NACUBO. What is that? NAC? It's probably in here somewhere. Here it is. National Association of Colleges and Universities Business Officers. They've had some guidelines too, but they're not the AICPA and the NACUBO. Those are not GAAP unless they are adopted in the codifications from the FASB. Okay. Where's this ebook at? Let me pull it up real quick. Cancel that. Go to chapter. I'll close this. 15. This is where I want to be, right here. All right. Yeah, so here we go. Private colleges and universities. Okay, is this the same thing? Where's the public? This is public. Okay. Yeah, okay, right here. The FASB requires private colleges. Okay, so it's FASB's in charge, and they require colleges and universities to report changes in net assets without donor restrictions and net assets with donor restrictions of the entity as a whole. Okay, so that's something that we're going to consider when we get to it. Okay, sometimes donor imposed restrictions is an important thing to consider. So if you think about it, like if you're a student at your college and you're a big fan of maybe you're a track athlete. I do track because I used to coach track, right? But regardless, you're a track student and you want to donate to the track team. Okay, if you make out a check, in our case to NGU, and you specify, down there in the memo section of the check that this is exclusively for use of the track and field program, then that is a donor imposed restriction. So that donation can only be used for the purpose that you're giving it. Now, when it gets to the track team, it might be used for uniforms or implements like shot puts and discuses, or just general equipment, but it gets down to, and you can specify it even more if you want to give just for uniforms, and you can put on their track team uniforms, and that's all it can be used for, okay? And then down here, public colleges and university, when issuing their financial reports, we're going to treat, like I said, as a special purpose government that's engaged in either business type activities or also some governmenties or both, okay? So it's going to be treated as a special purpose government, so it falls under GASB, and so we can follow some of the rules that we've already learned. Obviously, the business type activities, that's the proprietary funding type of situations, so we will have to do a cash flow statement, which we had to do for our enterprise funds and also our internal service funds, if you can remember those, right? All right. Let's keep rolling. Again, I want to be quick here. So what we got here? All right. All right. Here's some specifics down here with these loaned assets. Okay, loan assets. All right. Where's that wording at? 1 second. I thought I had it highlighted. Oh, it's coming up. Yeah. All right. So loan assets. Okay. Some accounting issues. See, these are some accounting issues that are kind of unique, essentially, to colleges, universities. One of them here is called loan assets. Okay, we see it here. Assets that are loanable to students, faculty, and staff of the educational institution are provided by gifts, grants, and incomes from endowments. In some cases, loans may be made to the institution for the purpose of extending loans to eligible individual. When a loan is made to an individual, the college or university would recognize a loan receivable. At the time the loan is collected, the receivable would be removed, and interest would be recognized as revenue. So that would be kind of straightforward. In other words, you may have to where an endowment is loaning the money to the student, which the student is then going to give it to the school. Okay, it's kind of a unique situation there. Assets that are loanable are classified according to any restrictions. For example, so let's highlight that one there. It's pretty good. If a donor makes a cash contribution that is used for student loans, it would be classified as net assets with donor restrictions by private colleges and universities. But then it would be restricted. It's kind of like fund balance, right? Restricted net balance, restricted net position for our public colleges and universities. All right. So, loan assets is kind of a unique thing that we might have to deal with some of our problems. Let's see. We've also got down here. Okay, again, the terminology is different for both of these. If it's a, let me make sure I say it right. If it's a private or for-profit, okay, then the residual, which is like equity, is going to be considered what is it? Net assets. Okay, so net assets is essentially the equity, as opposed to being called net position or fund balance or whatever else. But we will separate it into with and without donor restrictions. Okay, let's see if I can choose that color. I can. Okay, and then under the GASB standard, which is our public schools, public colleges, and universities, then we're going to call it net position as opposed to fund balance or whatever else you might want to call it. Equity, capital, whatever it's called, net position. Okay, and let's change that color. Okay, and then that will be separated into unrestricted, restricted, and then also investment in capital assets. We did some of that as well, that whole investment in capital assets. We did that in the enterprise fund chapter if you want to go back and review the exercises. Okay. There is mention of, okay, we're still coming up. So, when I saw this entry here, I got a little like, what? Wait, what? Okay, kind of a double take. So, relate this back to a tax levy, okay? Remember when we did a tax levy back early in the semester? We had a taxes receivable, right? It didn't say current, right? We'd say current. And then we would have an allowance for uncollectible taxes, and it would say current as well. And then the credit would be to, what was it? I got bugs coming in. I need to shut the doors. A bee flying around. Anyway, the credit would be to revenue, right? It'd be revenue. So we did a tax levy. It'd be tax receivable would be a debit, and that would be the full amount that you levied, even though you're not going to collect it all, right? And then you had an allowance for uncollectible, and then you had revenue. So here's an example, right, on my little board. You see here, if there's a tax levy for $30,000, and $1,000 of it was just considered probably uncollectible, then you see that the revenue would be $29,000. That makes sense, right? Nothing hard there. But when I see this, okay, it doesn't look the same, right? So you have the tuition and fees receivable is put in at the, the estimated amount to be collected. Okay, the $5,000 in this case is not necessarily coming from an uncollectible amount. Instead, it's going to be coming from, it says it up here, right? Expected to be provided from scholarships to the student. Okay, and so what this $5,000 is, it's kind of like a sales discount. Think about it. It is a contra revenue, and it's going to offset the tuition. Okay, so this tuition for the student might be $25,000. Okay, we expect to get $20,000 from the student, and then this is like the sales discount account, if you want to think about it that way, where it's going to be essentially lowering. It's going to be lowering the tuition and fees account by the amount of the discount. Okay, this is if it's an internal or a university awarded tuition scholarship. Okay, now if it's an external scholarship, like if you got one of those SCAPA scholarships, then SCAPA will be paying it in, and it'll be coming in anyway. It'll be just it would be treated differently. But an internally awarded scholarship, it would be treated. I want to say internally, it's a scholarship offered by the university. That would be a kind of like a sales discount situation. So down here, okay, if there is at some point, if there is an allowance, then this is how it will be treated, right? So this would be a debit to the. If a part of it is what does it say here? Estimated need to increase its allowance for doubtful accounts. It'd be this kind of a strange entry. So when I looked at it at first, it kind of confused me. When I dug in, you see it's a little more straightforward whenever you think about it a little bit. So this is kind of this. Even this right here is separate than this. Okay, this here entry up here, really, this is kind of a separate situation. Don't get confused with that when you're reading the text. Cash flow okay, we will call it expenses here for the most part, but also down here, this is something that was pretty cool. If you, I say pretty cool. If you're doing the FASB standards, if you're doing a for-profit or you're doing a private college, then you get options on the cash flow statement. You can use either the direct or the indirect method if you're doing either for-profit or state college, or not state but private. So either you're doing private college or for-profit college, you can use the indirect method. If you're doing a public institution, okay, then it's got to be requires the direct method, okay, which is what's consistent with what we learned in this semester already, okay. You got to use the direct method for enterprise funds and internal service funds, and also for colleges that are public because they're governed by GASB, okay? And is there anything left in here other than going through the transactions? That's the majority, okay? That's all I want to kind of I want to let you guys do the Learn Smart. And there's also on page, let's see what page it starts here. Illustrative transactions for private colleges and universities starts on page 626 of the text, and it runs through. Does it switch over to public? I don't see where it does. Looks like it runs through about page 631. So I would definitely review those journal entries and ponder them a little bit. Does it switch over? It does not. So those are all for-profit, not for-profit, private college transactions that you should review before doing in the chapter questions or the assignment, okay? So I'm going to go ahead and pause for today and work the problems up and be ready to go over them tomorrow with you guys around lunchtime. And then I'll be available for any help that you may need or want on a one-on-one basis. Don't forget you have options to excuse me. You have options out there to you can go back and rework some old work. Let's get our questions up there. How about our discussion questions real quick? Can I do that without showing anything? Here's our first question. I want you to give me an example, and I want them to be different from what I've said in the lecture. Okay, so you have to go back and kind of review. I want you to give me an example of the three types of colleges. Give me one example of a public college. So it cannot be a public college in South Carolina, or it can, as long as it's not what I mentioned. Okay, a private college. Obviously, we don't want to use NGU. That's where we go. That's private. And then an example of a for-profit, and do not use either University of Phoenix or Full Sail University. Find some other ones, okay? So your first question is to list one of each type of university. Hey, what's up, Jack? No, I'm not. All right. Nathan. Anyway, yeah, so that's your first question. List one of each of the three types. One public, one private, and one for profit, okay? Let's see. Let's get another question here, too. Real quick before I go. Let me find one of these. These bullet point questions are usually pretty good. I don't see any. Well, what's this here? Let's see. Okay, so here's the second question, okay? Who is that? NCIS fan? No, wait. Yeah. Question number 2. Identify the financial statements that must be prepared by private college or university, and those that must be prepared by a public college or university. So that's your second question, okay? The first one, so question number 1, I've already gone over it. Question number 2, identify the financial statements that must be prepared by a college, private college, and those that must be prepared by a public college. Okay? All right, guys, we will meet back tomorrow for the second part. So we'll see you then, guys. We'll see you then.